Hi, everybody. My name is Nathan Dean. I am a senior policy analyst with Bloomberg Intelligence. Just wanted to give you my weekly update of what's happening here in Washington. So, just to start with, let's talk about the Senate deal that has been going through, I think, a lot of the news headlines lately. I think if you've been recall, we've talked about this in the past. We had a $118 billion package that included aid to Ukraine, Israel, Taiwan, but it also included border security provisions. And I think, as everybody saw in the news last week, those border security provisions didn't pass a lot of the Republican Party, including President Trump. And so, as a result, Senator Schumer has decided to push forth with this package minus the border security, which is around $20 billion. So you're looking around a $98 billion package for Ukraine, Taiwan, and Israel, and so forth like that. Now, there's still some procedural hurdles that the Senate has to go through to get this passed. We do think it will pass. Obviously, 67 individuals in the Senate voted for it, just in fact, right before the Super Bowl started yesterday. But will it pass the House? Well, the answer is yeah, we think it will. But don't be surprised if it takes time. Like I've said before in other calls, the House and Senate, they're not here in February all that much. And as a result, don't be surprised if you see the House to decide to just take its time on this, not really answer the question of whether they're going to pass it or not. But then as we get closer to these government funding fights on March 1st and March 8th, and then that April 30th sequester, we do think that we're putting a pretty favorable chance that a lot of this aid will get through. Now, one of the big things that happened last week was the Treasury Secretary Janet Yellen testified to the House Financial Services and Senate Banking Committee, and we really had three main takeaways from that. And this is all in the financial regulatory space. Now, the first takeaway was Secretary Yellen didn't really use any type of language, or sorry, when asked about whether or not the Treasury Department was going to move forward with efforts to deem a non-bank financial institution a SIFI, also known as a systemically important financial institution, she used the words that it's not our preferred option. So what does she mean by that? So in Dodd-Frank, going back 14 years, in Dodd-Frank, there was this ability to deem a non-bank systemically important. And what this means is that at the time, it was AIG, GE Capital, Prudential, and MetLife. And if you're a non-bank and you're deemed SIFI status, you get heightened regulatory awareness, heightened regulatory scrutiny, which could include capital requirements. So for firms like BlackRock and hedge funds and private equity funds, there's been lots of whispers about this returning. Now, the Trump era regulators made it more difficult to deem a bank a non-bank SIFI, to deem a non-bank a SIFI status. The Biden era regulators have been rolling that back and making it easier to make a non-bank a SIFI status. Now, where are we? Well, Janet Yellen said last week it's not their preferred option. 2 years ago, specifically in response to a question about BlackRock, she said that she would prefer activities-based regulation rather than a entity-level regulation, meaning that maybe they're not going to go after BlackRock at an entity level, but certain activities. And I'm picking on BlackRock here because they're primarily the ones that have been in this discussion. Now, our take is that there's really no reason why we would see a SIFI tag anytime soon. The Financial Stability Oversight Council, which is just it's a very small staff over there that are looking at this. I think they're just way in the early stages. And if any tag were to come, I think it'd be 2025 or 2026. And it certainly would have to depend if President Biden wins re-election. So if you're in the hedge fund or private equity fund space and you're sort of concerned about this non-bank SIFI tag, I don't think you need to be concerned all that much. Second thing that Secretary Yellen talked about was cryptocurrencies. So she called for the Commodity Futures Trading Commission to be given spot authority over crypto. Now, this is actually music to House Financial Services Chairman Patrick McHenry's ears. He's got a bill out there, a market structure bill that essentially does this. Now, he's got another stablecoin bill out there as well. But the challenge here is that, yes, I think you could eventually get movement in the House on cryptocurrency legislation, but you're still going to run into that roadblock over in the Senate, for a couple of reasons. One, the total market cap of cryptocurrency is around 1.7 trillion. Now, this is higher than last year. It was around 900 billion last year, but 1.7 trillion pales in comparison to the 29 trillion that's on the New York Stock Exchange. That's just not to the level where policymakers like senators who are skeptical really get involved. And two, these senators over on the Democratic side believe that the SEC and regulators already have most of the tools that they need, and they're not willing to negotiate over some of these smaller things like the CFTC spot authority markets. I think as a standalone measure, that would pass. But group it together with a bigger bill, and things just begin to get muddied up. So what will happen? Well, as Elliot Stein and I have said multiple times before, it's going to be the courts that really dictate this, because as courts over the next few years rule against the SEC or rule against crypto oversight in general, and I'm making a very general statement here because this is just how we've seen in the past, some of these senators may actually change their minds. Because if I'm sitting up on Capitol Hill, I'd rather dictate what the regulatory framework looks like than have it dictated to me by courts. But it's just not going to happen. We still think a stablecoin bill could potentially get passed this year, but here we are in mid-February. We haven't seen much from Congress this year, so every day that they're not working on it makes it much more difficult. Last thing from Secretary Yellen, she talked about the Basel III endgame. Now, I talked about this before in a prior call, so I'm not going to rehash what the Basel III endgame is, but she didn't really say that she supported the proposal or not. In fact, somebody asked her, do you flat out support this proposal, yes or no? And she hemmed and hawed and didn't give a good answer either way. Now, some here in Washington take that to be that she was against the proposal and she's not going to support it because it's going to get struck down in courts and so forth like that. I took it as that she just wants to give the regulators flexibility to be able to change the rule as they see fit, and not just want to go out there and say, yes, I support the proposal, and then just bring more news cycle and more people saying, hey, we're concerned about this and so forth like that. Now, our take is that there's substantial changes that need to be made to the Basel III endgame, ranging from the operational risk provisions to the risk weighting of assets for consumer products like loans, mortgages, and so forth like that. And I do think the changes that are going to be made are substantial enough that could potentially warrant a reproposal. Now, this is where if the reproposal comes out, obviously the election is going to have to dictate whether they get it done or not. If the Fed and the other regulators decide, however, to push it out soon, maybe say like June, July, or August, you're then at risk of being overturned to the Congressional Review Act, which is this act, for many of you who are probably aware, that if the House has a majority, the Senate has a majority, and you have the president all on board, you can actually overturn a regulation. So if the Republicans win the House, the Senate, and the presidency, there's a chance that you could overturn the Basel III endgame, even if it's finalized. The one caveat with that is if you use the CRA, the CRA prohibits the regulators from going back and offering the same proposal. It has to be a substantially changed proposal, and it would essentially take the Fed multiple years to get another Basel III endgame out. So our take is right now, regulators are still working on it. I think a reproposal is more likely than not, but we'll stay tuned and see what's going on from there. So just some random tidbits before we get you back to your day. Marijuana stocks. So I talked about this a little bit last week, but there is rumors going around Washington as we speak that the DEA and Attorney General are imminently close to announcing a reschedulization change for marijuana. Now, marijuana is currently Schedule 1. It goes to Schedule 3. These marijuana equities, I like to say, have hot sauce on them because they're just so volatile. Anything that in Washington happens, these things pop up and go down and so forth like that. Now, whether those rumors are true or not, I don't know. These rumors happen all the time. But what we do know here is that we do believe reschedulization is coming. We've got a 70% chance on that in the next few weeks and months. So certainly keep that in mind. If reschedulization does happen, it has to come with another proposal, though. So you are going to see the reaction from the catalyst event of the announcement, but then you're going to have another reproposal, and you're having to go through the Administrative Procedures Act before anything were to happen. So if you are calculating the tax changes that come with reschedulization, and this is the biggest impact of marijuana equities, it's known as 280E. If you have any questions on that, please give me a call. I'll have Andrew Silverman, our tax guru, talk to you about it at length. But effective tax rates for these marijuana firms could go from 40% down to 5 to 10%. But it's all based off of the length of this rulemaking. So just keep that in mind is if you're in the marijuana space, certainly could see some headlines if those rumors are in fact true. And for what it's worth, it's actually based off of a law firm partner who posted something on LinkedIn. He used to be a staffer, and so that's where all this is coming from. This is why we say just focus on what you know. Other things happening this week, the House Financial Services Committee is going to have a very romantic Valentine's Day hearing on FinCEN, the Office of Finance of Terrorism, over at Treasury. We probably won't be paying attention to it all that much. Those types of rules tend to get more technical in nature, but if you're on the risk compliance side or if you work at a bank dealing with OFAC, you certainly want to pay attention to that. On February 15th, the Commodity Futures Trading Commission is going to have several proposals related to DCMs, CEFs, and FBOTs. And if you don't know what those mean, Dean, chances are this isn't applicable to you, but if you're in the derivative space, it has to do with technical amendments related to margin and risk internal controls and so forth. The only reason why I bring it up is CFTC hasn't really done much in the last 6 to 9 months, so this is actually probably one of the most exciting things they've done in quite some time. And then just two things are happening in the House. Don't be surprised if you see another impeachment vote against the Homeland Security Director. Representative Scalise, who is out for cancer treatment, has come back. This was a failed vote from last week that now is going to be tried again. So you're going to see some headlines on that. House is actually going to be fairly quiet this week as well. The only real vote that's up there that's interesting is there's one about LNG exports. So if you're in the energy space, some of our energy colleagues have been paying attention to that. And the last thing I want to say before is just FYI, next Monday is a holiday here in the States. It's a trading holiday, which means Bloomberg will not be open, so therefore I won't be here. So we'll go ahead and cancel next week's call. We'll have it again on February 26th. But I want to thank you very much for your time. Please feel free to reach out with any questions, and we'll certainly go from there. And again, thank you very much.